Wall Street ended sharply lower on Tuesday, with bank stocks bearing the brunt of losses for a second straight day as the Russia Ukraine crisis intensified, causing anxiety among investors and prompting Apple to pause all product sales in Russia. The Dow dropped nearly 600 points to finish 1.75% lower. The S&P 500 fell 1.5%, and the Nasdaq sank more than 1.5%. Chief Investment Officer at Cap Trust, Michael Vogelzang, said rising interest rates had benefited bank stocks earlier this year, but were now reversing course.
The bank stocks have been really sensitive on the upside to higher interest rates. As rates were rising earlier this year, bank stocks were doing really well because they respond to a wider net interest margin, so they can make more money on the spread that banks charge. So banks were a really important trade in the higher interest rate world. Today, given the risks that are going on in Russia and other places, we're seeing interest rates falling, and as a result, some of that same what's good for things on the upside are hurting them on the downside. So just simply the interest rate environment is a negative for banks. I think secondarily, with the potential chaos of the global financial system, what you're really seeing is the largest banks, the global banks in the U.S., get hit very hard, and of course, European banks are getting hit even harder. So. I really think it's a combination of interest rates and the geopolitical risk that we're seeing.
Shares of Wells Fargo tumbled 5.75% on Tuesday, while the broader S&P Banks Index fell sharply as U.S. 10-year Treasury yields sank to 5-week lows. Chevron hit a record high, closing up 4% higher as oil prices surged on Tuesday. And at the end of the session, Apple joined a growing list of companies shunning Russia, saying it had stopped sales of iPhones in the country out of, quote, deep concern for the people of Ukraine.